If it exists, people will collect it. But if it has value, people will invest in it. $81,833. That's how much Volkswagen charged for the Golf R333. Despite its inflated price tag, the limited edition hot hatch sold out in just 8 minutes. Investors are snapping up rare and interesting cars with increasing frequency, hiding them away in climate-controlled rubber rooms, making an investment vehicle out of an actual vehicle. In a future where your favorite poster car is owned by a faceless corporate entity, and all the analog driving machines have been snapped up into the cogs of the capitalist machine, will there be anything left for enthusiasts to enjoy? As usual, electric cars are to blame. It's pretty much guaranteed that the age of the roaring V8 has died, suggesting that internal combustion engines could become rare cult classics. People are nostalgic for burning fossil fuel, and when it's gone, they'll be willing to pay a pretty penny for the legends of a departed era. Dozens of funds have popped up to capitalize on the upswing, some claiming 25% annual returns. It sounds like the type of deal you would chill with a bot thread in the comments section.
I invest with Quandale Dingle because his methods are unique and extremely profitable.
But the reality is, classic cars have been one of the best performing assets this decade. Most of the data comes from Knight Frank, a research firm that tracks all kinds of luxury collectibles in a massive index. They say cars have historically been less volatile than stocks, yet outperformed nearly every industry tracked, including things like art, wine, and jewelry. The used car market has been lifted nearly 47% since 2020, during a time when the S&P 500 has returned only 38%. So it's no surprise that the rising prices have begun to attract
asset management firms.
But that's all pretty boring. So let's get to the part where investors are maliciously hoarding your dream car. The vast majority of people buying classic cars over $100,000 are investors, not collectors. As an example, consider this 1938 Fiat 1500. One of only 12 ever produced, it was last sold at an auction in 2018. Although the identity of the buyer was not disclosed, the car has since popped up in the Hedge Classic Collection. This collection, well, it's not really fair to call it a collection, actually. This portfolio is one of the 3 investment funds offered by Hedge Capital, a Swiss asset management firm specializing in alternative securities. They launched their classic car fund in 2021 with a €50 million start. The fund's investment objective is to provide shareholders with blah blah blah. It literally says that their objective is to purchase vintage cars that are historically significant or bear some instant classic characteristics. In addition to that lovely Fiat, they've also got a Ferrari 430 Scuderia, 360 Challenge Stradale, Jaguar E-Type, and the Bizzarini 1900 GT, chassis numero uno. They plan to acquire a total of 35 cars, hold and maintain them for about 5 years, then liquidate for a tidy profit, of which the management team will receive a 30% cut. The cars have been reduced from an object of passion to an instrument of profit. And Hedge wasn't even the first. One of the earliest companies to enter the space was Rally Road. Founder Chris Bruno says he made the mistake of purchasing a vacation home instead of his dream Ferrari a decade ago. The Ferrari has since appreciated in value far faster than the house.
Truly a relatable and heartbreaking tale.
To make up for the regret felt, he created Rally Road, an investment app that allows users to purchase fractional shares of collectible items, such as trading cards, sports cars, and NFTs. Yeah. They currently have 47 automobile assets listed on the exchange, including everything from a Porsche 951 to the special edition 7-Up Mustang. You too can achieve supercar ownership for only a few dollars. And for that, you'll be given the privilege of looking at pictures of it and voting on when to sell. It was a unique idea, but critics of the app have pointed out that for lower-end cars such as these, much of the benefit a typical collector would receive is the ability to enjoy the ownership experience, aka drive the damn thing.
Even if you can't necessarily take it home, you just have a piece of that investment.
Democratizing has its benefits in accessibility, but with the drawback that participants don't receive a, well, tangible vehicle in return. Rally Road's flagship offering, a 1 out of 2 turbocharged Lamborghini Countach, has sadly declined in value roughly 28% since its initial offering at $635K. In fact, of the 37 cars currently available to trade, I could find only 3 which have been profitable. The app is a far cry from the returns touted by more high-end firms like Hedge Classic. One explanation for their decline may be the type of cars Rally Road has purchased. While Hedge stockpiles 6-figure classics, Rally Road's approach has been to purchase more common enthusiast cars that will be easier to liquidate, and in flashy colors to attract the childish mind of your average Robinhood user. Potential returns are also greatly offset by the high cost of storing and maintaining a vintage ride. The average classic car could cost up to 10% of its value in maintenance and sales commissions, making any investment less than 6 or 7 figures, frankly, not worth your time. Ye enthusiasts may breathe a sigh of relief that your crusty Toyotas, dusty Hondas, and broken Nissans are safe from the hands of wealth management megacorps. At least, they are for now. Thanks for watching.